All right, first, let me break down my trades and just go over from top down. Um, Everything that I was seeing, what I was telling you guys yesterday in the report to be mindful of and pay attention to. Um, then the analysis, this rising pre-market session, and the levels that I was looking at, the sentiment, the fundamentals, how all that combined with technical analysis allowed us to capitalize on some good sell scalps today. Then when we're done that, we'll go over anybody who had a difficult time with price action, allow you guys to share your screen, go over your trades, pick apart what went wrong, what things you were looking at that you could possibly look at better, and hopefully make some adjustments. All right. Excuse me. All right. So first, hopefully you all are reading the reports that I'm hand typing out for you guys. I'm not joking when I sit here and say like I might use chat GBT to organize these better for you all, but I literally go through every single day and read 5 or 10 fundamental reports to conjure all this information for you guys. I hand type them out, and if my funkiness is like all over the place, I'll put it in the chat GBT to organize it better so it doesn't sound like sporadic throw up. But nonetheless, I only read reports from like Wells Fargo, Reuters, Bloomberg, all these platforms that require a paywall for you to get the good data and the good information. I read all that shit and then I give it to you guys in one condensed report. So, yesterday, one of the primary things that I was telling you all that we need to pay attention to today was how the market reacts to Samsung's earnings reports. So, you can see that here. I said what we're going to be watching tomorrow. The biggest event will be Samsung's electronics preliminary Q2 earnings guidance, which is expected to provide one of the first major reads on AI semiconductor demand this earnings season. Investors will be looking closely at memory chip demand, HBM pricing margins, and management outlook. So that's one thing that's going to play a role in today's breakdown. Then, of course, we had this right here. Geopolitics will remain another major driver of sentiment. Markets have stabilized after President Donald Trump stated that there will be no attacks during the funeral period, helping maintain the recent improvement in risk appetite. However, the funeral ceremonies of Iran's former supreme leader continue all the way through Thursday, meaning markets will remain extremely sensitive to any military escalation during that period. Any attacks or breakdown in the current pause could quickly reverse risk sentiment in global markets. So those are two primaries today that we were going to be mindful of considering the data calendar was relatively light. We did have the ADP employment change, which came out showing signs of a slight decrease from a previous reading, but nothing substantiating enough to completely like drastically change market sentiment. So the Samsung earnings reports and the rhetoric between Iran and the United States was of key importance today. So when I came into the market this rising, that was the first thing that I checked as we rolled through Asia and London trading session hours. And so that leads me over here to the report that I gave you guys this morning, where I said to you all, overnight, both the crypto market and Nasdaq came under selling pressure as investors shifted into a more defensive stance. We had renewed geopolitical tensions weighing on market sentiment after President Donald Trump threatened further military action against Iran, while Iranian officials warned that peace negotiations would not resume unless those threats were withdrawn. The headlines reignited concerns that the conflict could escalate further, pushing oil prices higher and reducing overall risk appetite. At the same time, investors largely looked past the Samsung record earnings reports. Despite posting exceptional results driven by AI related demand, markets sold off as traders questioned whether explosive growth in the AI sector can continue at its current pace. Instead of boosting confidence, the stronger earnings reinforced concerns that expectations across semiconductor and AI stocks may have become too optimistic, leading to continued profit taking throughout the Asia and London trading session. Adding to the cautious tone, traders remain reluctant to establish aggressive positions ahead of tomorrow's FOMC minutes and or I don't know why I keep saying minutes. FOMC meeting. Every time I type FOMC, I just automatically put minutes, but it's the meeting, not the minutes. Markets will look for any clues on the Federal Reserve's view of inflation, labor market conditions, and the further path for interest rates. While rate hike expectations have eased slightly over the past week, investors are still pricing in a roughly 58% probability of September rate hikes, leaving the markets highly sensitive to any hawkish language from the Fed. At the time of writing, the total market cap for crypto is down roughly about $12 billion on the day, while NASDAQ futures have fallen from roughly around the 39.9 dark pool and into the 29.67 dark pool, which is currently acting as support. If New York trading continues to favor sellers, and 29674 fails to hold, our next downside objectives remain 29450 followed by 29044, both of which could provide attractive bearish scalp opportunities. On the other hand, if buyers defend 29674 and we can see buyers reclaim 29775, which was where London session highs were, and successfully flip that level into support, momentum could shift back in favor of the bulls, putting a move back towards the 39.9 dark pool back on the radar. Outside of the Middle East headlines, attention will now shift entirely towards the FOMC meeting, where traders will be looking for confirmation on the Fed's inflation outlook, any disagreement among policymakers, and whether policymakers still believe additional tightening may be necessary later this year. Combined, of course, with ongoing Iran headlines, these two catalysts are likely to dictate overall market sentiment through the remainder of the week. So, my analysis this rising was bearish as long as what? As long as price was below the 29,975, or where is it at? Right here. The 29,775. Because I said only if buyers can defend 29,674 and reclaim 29,775, flipping this level into support, then we could start to look and shift our attention back towards buys to the dark pool at the 39.9. So my sentiment today was predominantly bearish, considering all of this market sentiment over Asia and London flipped the market risk off temporarily. All right. So that analysis coming into the session, now we can focus on technicals. Okay. So 15-minute time frame. This is something that I conveyed to you guys yesterday very aggressively, which is making sure that you're trading in tandem with the moving averages and where price is located at in regards to the dark pools. Okay. So from yesterday's session high during New York, which came in at around 11 a.m. yesterday, and we touched the dark pool, the 39.9 to the absolute freaking pip. Then we rolled into Asia session trading hours. If we turn on the session indicators, just to show you guys my markings, here we have Asia session highs. So I simply just highlighted the last up candle before the down move that created this new bearish leg during Asia session from A, breaking previous bullish structure, down to B, right? So that was my first area of interest where buyers, if they're going to regain control of the current order flow, are going to need to break bullish above. Then we roll into London session. And so same thing, why I gave you guys that if then scenario where if we want to see buyers back in control, we need to break the 29,775 level is because that came in right at London session highs. So London session highs start here. I simply highlighted that area, extended it over to the right-hand side, and that became a key area of significance that if I was going to buy today, I wanted to see price action break above it, retest it. You can see that that would come in at the 29,775 and then see bullish price action above it before I started to take buy positions to target the dark pool to the upside. All right. So those were my two premium areas of interest today. We can now turn off the session indicators so that way you all aren't confused with all the freaking lines that that thing creates. So overall fundamentals this rising were bearish, or at least temporary risk off. Asia session rolling into London session, we are seeing bearish order flow. From yesterday's dark pool, we can see a delta held. Here's your 1, break of previous structure, creating the 2, pull back into the 3, and then price converges, moving average crossover happens, and we start trading beneath the moving average from Asia, rolling over into London. London session, we see buyers try to make a formal attempt to absorb the sell volume, but they fail. And yet again, here in this area on the 15-minute, we see another delta held, where we're now trading at the dark pool at the 29,674, which I mentioned to you on this risings analysis, we needed to see turn back into support. And the same exact pattern that happened during New York in Asia session, where we had highs, new lows, a pullback into a premium before the sell-off, that same pattern happened right before New York session open, where we can see internal liquidity, a high taken, failure to break previous bearish market structure, and failure to break above the 50 EMA on the 15-minute time frame. And then we see new lows created. So highs taken, new lows created. This now became our new A to B move, or the range that was the most immediate range that we were operating in coming into this New York session here. So logically speaking, right, when I gave you guys that analysis this rising, what I was seeing is that if we were to flip bullish during this New York session, we would need to at least break above this new range high, where we have now created new bearish order flow. There was previous buyers in this area that tried to absorb sell volume. They failed. Sellers defended previous area where they became aggressive, and they created a new structure A to B leg. So coming into the New York session open, which was here in this area, I was simply just looking for sells under the anticipation that if the trend was going to continue, we were likely going to see a premium either during London or during Asia respected, and it was going to present sell opportunities today during New York session. Is anybody confused on my higher time frame backdrop so far before we jump down to the lower time frames? Why I was identifying these areas of interest, how I was identifying that the current momentum was in favor of sellers until proven otherwise, with buyers back in control above dark pools, above previous session highs, and above EMAs. Right? Anybody confused up to this point as to why I was seeing sells today? Okay, that will allow us to jump down now to the lower time frames. So keep in mind as we go down to the lower time frames, how these 15-minute AOIs converge to the 1 minute. All right. So we'll go down to the 1 minute and we'll take a look at New York session open. Okay. So now we're on the 1 minute time frame. Here is that London session high where we had a new bearish leg created, which here was the last 15-minute bullish higher low that liquidated internal liquidity, failed to break a previous structure lower high that created the last down move. You can see the internal liquidity here above this high. We failed to create a new structure high in comparison to this one, and instantly following the sweep of liquidity, we create a new structure low. So you can see all of this bearish price action takes out the most immediate bullish move. And so this is what I was seeing. We were in this new A to B range coming into the New York session, which is here. And until we break back above this most immediate bearish high and see price action trade above it, right? Then we were in a bearish leg coming into the New York session, which was from here to here that broke this previous bullish leg from here to here, right? So that's what I was seeing. Now on the 1 minute time frame, coming into the New York session open, which happened at 8:30, which is right here in this candlestick wick. Prior to that, we can continue to see sellers defending this premium range, where yet again, we're seeing highs taken. Price comes into the AOI from that previous bearish leg and breaks previous bullish structure, creating now a new A to B move on the 1 minute time frame. Prior to the session at 7:45, you can see buyers making a formal attempt to defend against that sell volume. However, they get trapped. We see another failure swing high in comparison to the previous one. And then we see a new bearish structure from A to now B, breaking all the previous bullish volume prior to the New York session. So not only are we operating in this bearish leg from A to B, but now right before the New York session, think about it. Asia session sold off, London session sold off. We are now operating beneath a dark pool at the 29,674. And right before the New York session, we have created a new bearish structure leg from A down into B. So right before the New York session, all I was simply doing to catch this move was taking a fib from this new bearish leg from A down into B and waiting for price to come back up into a premium. So I took my fib from the high down to the low, and I waited to see how price could react to either the dark pool or how price could react to the premium range, highlighting the last up candle before the down move as my sell wall, that if I was going to buy, considering that sellers are in control, I needed to see price break back above this level and turn it into support, which is where and why I identified that 29775 as my key area where I wanted to see buyers trade back above before I became a buyer, right? And so right at the New York session open, you can see price came straight into the 79% premium, respected the sell wall, buyers got trapped. We know New York session is not going to sell from a low. They're going to push price into a premium and then take their sells. Look at where New York session opened at. New York session opened here, comparative to where London session sold from all the way up here, and where Asia session sold from all the way up here. New York session pushed price into a premium. Buyers made a formal attempt to overpower the sellers. They failed. They got trapped underneath of the dark pool. We can see this huge absorption wick under the dark pool. Let me mute you guys. And so all I simply did to catch this first sell position was I trailed this bullish candlestick with a sell stop. That sell stop was activated among this bearish candle. My first stop loss was above the dark pool at the high. After price started to respect the moving averages and we continued to break this structure low, I trailed my stop loss down right above this bearish candle. And the first trade I took out at the bottom, if we zoom out and we go back, at this previous resistance that was then acted as support, I highlighted that area of interest as an area where buyers could possibly defend. When we came into that area, that is where I took the first portion of this trade off the table. So that was the first position. Then the continuations came where we can see, and this is again where buying might have caught you off guard, but remember the confluence, you guys and gals. So think about it. I just showed you all fundamentals from the top down. Fundamentals pre-New York session, bearish. Asia session sold off. London session sold off. 15-minute is bearish. Now we're on the 1 minute and price is still beneath the EMAs, right? So before we buy, what ideally would we like to see? We would like to see on the 1 minute time frame at least price trade back above the 50 EMAs and back above previous bearish price action. So we would have at least, before we bought, needed to see a break of previous bearish structure, a retest of the 50 EMA or a retest of previous bearish structure, turning it into support, and then a new bullish structure leg like this to then say to ourselves, okay, now buyers have created a new structure leg after engulfing all the previous sell volume. So now we can start to look for buys under the anticipation that if buyers are going to push price higher to some undisclosed area above, they're going to need to reaccumulate orders. That's going to come in the form of pullbacks, retests of previous bases, and moves higher. And only these two positions would open up the door for good risk to reward trades under the reversal, buyers back in control. And so that never happened, right? So with that in mind, what I was seeing after buyers tried to make a formal attempt to absorb the sell volume here, we could not break back above the 50 EMA. So sure enough, I saw another delta held here. Same pattern that Asia session created where we were liquidating internal liquidity, taking highs and making new structure lows. We see that same thing here. So I'm going to drop down now to the 30-second chart to go over the second position. The second position, we can see an internal liquidity high taken. Why is this internal liquidity? Because the overall structure leg is from A down to B. So this is all just internal liquidity, microstructure. For buyers to be back in control, they would need to take out the last previous bearish range. We don't see that here. Instead, we see highs taken, and instantly following this high taken, look at the bearish structure here. We see a higher low, and instantly following a high taken, we see a new low created. So that to me was my new 1, my 2, and then upon this bullish pullback, this was my 3. If you take a fib from the 1 to the 2, this is going to come in at about 79% discount or premium from the high down to the low, 70% give or take. So I just trailed this bullish price action with a sell stop. The next 3 bearish candles executed that sell stop. Stop loss originally was nice and tight above the high. As price trailed into profit, I went ahead, moved this trade into break even. All right. Same thing here. As we came down into the dark pool and I started to see buyers absorbing sell volume, we can see a failure swing low right here. I closed this trade completely. And then I did the same exact thing for the next position. I just waited. I waited before I bought to see if buyers could regain control of the dark pool. So same thing that I just did for this trade. What you're going to notice is the same exact pattern plays out yet again. Keeping of course in mind that from the higher time frame, top down fundamentals, 15-minute, 1-minute bearish, and now we're on the second chart and we're seeing continuation moves. Here's the same thing. Same exact pattern for this trade. We see internal liquidity. So now here's the last bearish range. Here's the last up candle before the down move that breaks all this previous support. So this is now the new bearish range that we're in. You can see internal liquidity pockets. As soon as those internal liquidity pockets are taken, what happens? New structure lows are formed. So we see a new high and a new low instantly following the internal liquidity being taken. That fails to break previous bearish structure. So this was now my new range from A to B for a nice continuation move. So upon this bullish pullback, I simply just trailed this price action with, again, more sell stops. The sell stops were activated all here in this area. Stop loss was nice and tight above the high. And I rode this trade down into the top of the delta. Straight into the delta, I just set a buy limit and took this trade out completely. So those are the 3 sell positions.